Okay, a very good Monday morning to all, and a warm welcome to this webinar titled Angel Investing, Crowdfunding and Tokenization. This webinar is organized by Bambucorn, an equity crowdfunding platform holding an innovation testing license from the Dubai Financial Services Authority. Bambucorn is also authorized for participation in the Fintech regulatory sandbox of the Central Bank of Bahrain, having been granted authorization to operate as Securities tokenization platform. Bambucorn is one of Angels's group companies, and Angelsinvests in early-stage technology ventures globally. I'm the CEO. My name is Narayanan Ganapathy of Angels Ventures and the Senior Executive Officer of Bambucorn. I will be moderating the session today. I'd like to set some context to the webinar by providing some statistics on angel investing, crowdfunding, and tokenization. According to the Center for Venture Research, New Hampshire, the total angel investments in 2019 in the US alone was circa $24 billion. Also, until the third quarter of 2020, the number of angel deals have outperformed the seed deals in the US. In the MENA region, whilst extensive angel investments data is not available, we've seen the first 3 quarters of 2020 generate a total of $803 million invested in 360 early stage companies by a total of about 145 institutions. You'll all be glad to know that about a third of such investors invested in the regional deals for the first time. So that indicates that new investors are willing to take exposure to this asset class. And about 31% of the investors who invested in the regional deals came from outside of the region. Now, to give you some perspective on the equity crowdfunding space, which is gaining momentum as an alternative financing mechanism for innovators. The total equity crowdfunding volume based on Cambridge Center for Alternative Finance was circa $4.8 billion, excluding China, showing a CAGR of 113% over a 5-year period. That's massive. The Middle Eastern market is, of course, very much at its infancy, with an average annual volume of $86 million based on 3-year data, and a per capita of 30 cents, as opposed to 63 cents globally. On the securities token market space, which I believe we are in very early days of, the market cap, which currently stands at $515 million, is expected to grow significantly, with even the SEC chairman thinking so, as he mentioned in a recent webinar, that it may well be that all stocks could be tokenized one day. So with this context on these 3 interesting and interrelated topics set, we hope to hear from this group of esteemed panelists on their perspectives from their unique vantage points. We'll now do a quick round of introductions so we can get to know the panelists well as we dive deep into the discussions. So why don't we start with Yasmeen? Yasmeen, do you want to go?
Hi, sure, everybody. Hi, thank you, Narayan. This is Yasmeen Alsaffar. I'm from the Economic Development Board of Bahrain. And just maybe a little brief about myself and the organization that I do work with. I'm part of an organization that is a quasi-governmental agency chaired by His Royal Highness the Crown Prince of the country. We're mandated to attract investments into the country, with a focus on a number of different verticals that we kind of focus on. One of them being obviously is financial services, and that's the sector that I work quite well in and predominantly in. However, we do have an overall arching umbrella to kind of look into the different sectors that would contribute to the overall economy. Be it from financial services to innovation and technology to real estate to health and care and and tourism and the lots. Specifically around financial services, this is quite a very interesting area for us because we see it as kind of an enabler for the sector in general. And we are keen to kind of always continuously engage with the local industry as well as the international industries, as well as with our regulator, the Central Bank of Bahrain, to ensure that we have the right business environment to kind of have companies thrive in Bahrain. And startups and fintechs have been quite a dominant theme for us for the past couple of years, as we embark on in our innovation and technology roadmap across the number of different verticals. However, for financial services, given that we have a track record of 100 years, that's always been very helpful to us. On a personal note, basically, I've been with the financial services or the EDB team for the past almost 10 years now, I think, to date. And so I've seen the growth of the industry. I've seen the growth of the EDB, and it's always comforting to see all these different changes happening, as we kind of grow within Bahrain's ecosystem. Yeah. So nice to meet everybody.
Thank you, Yasmeen, for your introduction. Why don't we move to Khaled AlFahim to Abu Dhabi? Khaled.
Thank you, Narayan. How are you? First, good morning to all of you, and good afternoon. Actually, it's good afternoon if you're in the UAE. I work for a family business, which is a startup on its own right. All of the family businesses were startups once upon a time, and so that's where we get our startup interest. I sit on the board of two startups, one based in Berlin and one based in the UAE, and they work within the field that we operate in, which is the automotive and the automotive industry. We had access to startups and the technology sector previous years through funds and funds of funds. Unfortunately, those experiences were not successful, so we've decided that most of our investments to happen directly. So that's what we approach. We see a lot of startups in the region that are starting here in the UAE, and I personally see at least 20 or 30 startups a year, and we go through the cycle and see who we can invest with and who we can't. So we see a movement in that scene, and there's a lot of growth coming to this region, inshallah.
Khaled, thank you very much for the introduction. We very much look forward to hearing from you during the panel discussion about some of your experiences. Having said that, let's move over to Shelly, the founder of iAngels. Shelly, over to you.
Hi, nice to meet you. So I'm the co-founder and co-CEO of iAngels, which is a venture capital investment platform and an equity crowdfunding platform that I started about 7 years ago with my partner, Mora Asia. We enable accredited investors from all over the world to invest in high-tech startups in Israel across sectors, across life cycle. We started investing 6 years ago. Today, we're managing $300 million across about 100 companies. Some of them we've even invested up to $15 million in one individual company. We're active in 60 countries today. We have 20,000 members on our website, and it's been a very interesting time for us. Since we started iAngels, Israel has become one of the most important technology hubs in the world, and this opportunity is especially exciting as it really plants the seed for collaboration with the rest of our region. And on a personal level, prior to starting iAngels, I come from finance and investing. So I worked for several years at Goldman Sachs in the investment banking division. Before that, I worked at a hedge fund in the US in distressed debt, where I invested in financial companies, insurance companies, banks, real estate investment trusts. And before that, I worked at UBS in private wealth management. So actually had the opportunity to do kind of a 360 on the finance world, both on the buy side, on the sell side, on the private side, on the public side, early stage, growth stage, advisory, M&A, and now I do early stage investing. So that's a little bit about me.
Thank you very much, Shelly. I think I share a lot of similarities in terms of background, so I'd definitely love to connect with you offline.
Would love to.
So let's move on to Hussein. Back to Bahrain.
Hi, nice to meet everyone here. My name is Hussain Haji. I'm the CEO and co-founder of a startup called Inagrab. A little background about what we do is we offer a solution that basically connects the e-commerce space with the gig economy space, ultimately helping 30% of youth in the MENA region who are unemployed get access to a source of income using a core product called the Dalouni. The word Dalouni in Arabic means guide me, and the whole perspective is they are able to refer a product to actually make cash commissions for themselves. A little background about myself. I'm actually an ex-investment banker, and I think it was in 2012 when I quit my job to pursue entrepreneurship without a plan. And I failed miserably in my first two attempts, which is not a bad thing. It's actually a very thing that I'm extremely proud of. And very quickly jumped and started a business that went on to actually get acquired in the millions, and then another business afterwards that actually got acquired again in the millions. So I managed to sell 2 companies after those 2 failures, and I'm currently doing my number 5. So it's a pleasure meeting everybody.
Excellent. Thanks a lot, Hussein. They say you learn a lot more from failures than from successes, so we'd love to hear from you, your experiences in the past. Let's move to last but not the least, Akshata from Dubai.
Hi everyone, thank you Narayanan for having me. This is Akshata Namjoshi. I lead the Fintech practice for our firm, KARM Legal Consultants. We are a UAE-based firm and primarily focus on advising on emerging tech, which means that we've had the fortune of having advised quite a few projects on tokenization projects, crowdfunding. We started off at a time when the world was still dabbling with utility tokens. We then were lucky to see a lot of projects jump into the security tokens, digital security space, and now more so towards mixed models of crowdfunding and digital securities. So yeah, I think we've seen, as an advisor, we've seen quite a journey of various startups, various projects from different fundraising models to now more sophisticated fundraising models, which are also regulated by many regulators in the region. So yeah, looking forward to interacting with all.
Excellent. Thank you very much, Akshata, for that introduction. I'm sure the audience is going to be benefiting from your unique vantage point, having, since you've seen the breadth of businesses across in this region particularly. So let's start with Yasmeen, maybe for the panel discussion purposes. So Yasmeen, you're representing an ecosystem builder of startups here in Bahrain. So particularly from the financial services point of view, what would you say are the building blocks of successful fintech or successful fintech companies here in Bahrain?
Sure. So like I've mentioned earlier, I'm part of an organization that kind of has that kind of bird's view of all the different, players and the verticals within Bahrain. And startup, has been quite an integral part, specifically on fintech. This is an area that I've had quite a lot of experience in, and we've seen the growth of fintechs in Bahrain, banking on, the history that Bahrain has of, celebrating 100 years as last year of, a financial services industry. All the right kind of, let's say, infrastructure is available, and having a pro innovation regulator always helps. Kind of thinking of pushing that agenda forward. So we've seen, as early as 2014, for example, there was a push of regulations on the payment space, and we were first in the region to do so. Later on, I think as we kind of progressed even further, I think back then fintech was really a buzzword, and not many people had an inkling of what that was really. So that whole awareness, needed to be raised across Bahrain and in the wider region as well. And we've seen a lot of very good, good stories across the region as well. Bahrain itself, our building blocks has been to always ensure that our business environment is feasible. It's kind of, inviting to those startups and fintechs at the same time. As an enabler sector as well, you need to have access to finance. You need to have the right frameworks and the setup. So what the central bank and us have been really working hard hand in hand to kind of push across is, the right kind of set of setups and regulations. And crowdfunding, for example, crowdfunding regulations have been pushed out as early as 2018, both on equity and financing, where in the sense it could be Sharia financed as well, Sharia compliant. And so far, I think within the region, we have had obviously Beehive that is operating both locations. And we anticipate to kind of get more players in the market. That is very exciting because at the end of the day, this is what the crowdfunding platforms would serve ultimately, kind of giving access to those startups and those players. Venture capital also plays an interesting role in this space, where with the government and some governmental bodies had actually put forward a fund of funds to support the ecosystem to kind of get that push across to the next level. This is our own kind of, let's say, but specifically if I hone in onto the fintech story, we've had a lot of support also from the industry just to ensure, and from the startups themselves and the fintechs. Because what we initially had done is we needed that kind of collaborative approach, and we've been very successful with that in terms of having players come and introduce some of their concepts, their products, their solutions to the players here. And for the players here to kind of share their pain points and kind of highlight where are the areas that they can kind of, collaborate on specifically. It's allowed both entities, both kind of parties to see where these issues could be. And, as EDB, we've played that kind of facilitator role to ensure that kind of conversations does happen on different levels as well. There's been an introduction of Bahrain Fintech Bay, the launch of that. Within the central bank itself, there was a fintech unit that has been created as well, to ensure that kind of innovation mindset doesn't kind of fizzle down, it gets carried across all the different players. But for companies that are looking at Bahrain, for example, what has been helping them is kind of this using Bahrain as a springboard or a testing ground. Having to deal with one regulator sometime, it's much easier. You kind of get to sort of do your proof of concepts and then kind of navigate to the rest of the region, depending on where you see your product kind of materializes. And I think there has been really great classical experiences that we've had so far, from people that actually had taken advantage of the launched regulatory sandbox of Bahrain back in 2018, that have actually established themselves in the open banking space, for example, and have actually used Bahrain as a springboard to the rest of the region, and they're currently expanding to other jurisdictions. So it's always great to see, organically grown companies, and we expect to see much more. Obviously, we have Bambucorn here as well that have decided to go into our regulatory sandbox. So I'm looking forward to seeing, more companies and more players to kind of join our ecosystem.
Well, thanks a lot, Yasmeen. Actually, wearing an investor hat, I remember having had a lot of conversations with the Economic Development Board, and I think EDB's made a lot of kind introductions to interesting startups coming from outside of the region who've set up shops here with a view of penetrating the entire market here, particularly the eastern parts of Saudi Arabia, which as a market is massive. So thanks for continuing to play that role of an ecosystem builder. I'm sure Hussain, who is the one who I'm going to be moving next to, would agree with the startups this region benefiting a lot from EDB's role. Having said that, Hussain, just moving on to you, I'd consider you as a successful founder of a damn innovating, of an innovation startup, Inagrab, with Daluni as a brand. And I've had interactions with you over the last 2 or 3 years when you actually conceptualize. And I think you've raised pretty decent money from good VCs and investors here in the region. So talk to me about some of the challenges that you went through at your initial phase, and how really you overcame them.
So every startup faces the challenge of fundraising. That's a given. But then it differs very heavily from where we are and where startups originated from generally in the West. So I think there's a statistic that says an average time for a startup in San Francisco to raise funding is somewhere along the line of from obviously meeting the investor for the first time and then closing the deal and then getting the funding dispersed is almost a month. While in our region, it actually takes around 8 to 9 months. And that could make or break a startup generally. I think the main challenge was getting people to believe, but I mean, I've had the experience. Other startups in that retrospect that don't have the experience in fundraising might actually have to go through a much more difficult time. The main challenge that I think I faced was whether I should be taking money from VC or taking money from strategic investors. And that was something that I actually had to take a look at. And obviously, if you want to take money from a strategic investor or a private investor, what would happen is you have to treat it in a completely different standard. To be able to convince them to get the money in first, and then convincing them to go through something that's called a convertible note that generally did not exist for a long period of time was something on its own that was very difficult. But then again, we managed to get through it and do it. So in the most recent fundraise, where we have, the total number of investors that are available on my board, on my cap table today is quite significant. We have around 6 or 8 or 7 investors, of which are obviously EDB did support us locally as well when they initiated the whole thing. The whole startup ecosystem kind of like support scheme, which happened, I think, a few years back. Something called Seed Fuel popped up, which is part of the Bahrain Development Bank. These guys actually were our first investors and our first believers in the company. So technically, they sit on our board, Bahrain Development Bank. We have Flat 6 Labs, which is a local accelerator. It's available in the MENA region as well, I think 7 or 8 locations. And then we actually had 500 startups invest with us and a couple of VCs based out of Kuwait. The most recent round came from a couple of strategic investors. Again, one of them based out of Bahrain and one of them based out of Kuwait. Strategic in the sense where they can give us connections and actually get their hands dirty with us instead of just giving us money and letting us run. So the main challenge was, as I said, trying to get the private investor, knowing which one to choose from strategic investors and venture capitalists, but then if you choose one of them, there are flaws and pros and cons, and you have to teach them how to use a convertible note, as opposed to talking to be able to get obviously the cream of the crop, which is their support and they're getting their hands dirty. And then the other challenge would be with VCs is, hey, how can I convince the VC that already invests with like 100 other startups or 50 or 60 other startups to kind of like get their hands dirty with us? So I think that would be the main challenge, other than the factor of time. That was my major challenge based on my experience, that is.
Well, it's interesting, Hussain, because this actually also makes me think about one of the questions that we received on the Bambucorn platform, from one of the savvy persons, where we keep writing blogs on angel investments and crowdfunding, and this question came from somebody in the region saying, "Hey, we have a fairly limited number of VCs and strategic investors who invest in startups. And on the one hand, the recommendations generally that we see is that founders should be looking not just for money, but also for strategic advice and certain other inputs. But here, do we really have the choice? Because money is definitely important. And do we have as many strategic investors and VCs where we can actually choose? I think that's clearly one of the challenges, isn't it?
It is a challenge. Don't get me wrong. I'm all for take as much money from anybody as much as whenever you can to be able to prove your point. But then again, you have to be able to select investors yourself as a startup founder rather than just allow investors to select you. And working with a small bunch, there is a whole curation that actually happens that you should go through.
Sure.
But yes, it definitely is a challenge.
That's why we believe that educating more and more people and getting them to come into this space will probably help alleviate some of these problems faced by founders in this region. But having said that, let me move to Khaled. Khaled has been not only an investor in mature companies but also in startups. So he's obviously seen both ends of the spectrum. So Khaled, tell us, so share with us some of the key learnings that you've had having invested in those startups, and also how can aspiring angel investors continually educate themselves about angel investing?
Well, Narayan, I'll tell you about our recent experiences. So we've invested in a startup based out of Berlin. That's in the automotive industry. And what we really look at, to be honest, is the people running it. And that's what you maybe lack, that's what I've seen in majority of the startups that I've met. They lack the commitment and they lack the drive. A lot of them have brilliant ideas. They've done their homework, they've studied the concept, probably copied a concept from elsewhere, and they want to create a local version. Their problem is that they're not willing to go the whole way. So they probably have another job, a full-time job, and they're doing this on the side. I've met a couple of those, and I understand where they're coming from. So it's very difficult to leave everything and just jump into a startup. Or they lack the basic knowledge or are willing to listen. So they're too involved in the concept rather than the details that they wouldn't let go. This is how I've seen it. This is how I envisioned the startup. And this is how it will happen. And all I need from you is your money. And those are the startups that we unfortunately have to reject. So we look at who is driving the company first. What are they willing to do? What are they willing to put in that company? And are they willing to listen? Because we, as a family business, we don't come in. We're not a VC. I like Hussein's. We're a strategic investor. We are willing to help and attend meetings and be there when the company needs it. Because the ecosystem is not ready in the region. With all due respect to a lot of the entities here or the government. They say that we've created an eco, but you have still a lot of legal framework to protect you. You have a lot of things that are still pending or it requires. So I understand when Hussein says in San Francisco, for example, it takes a month compared to more than 8 months here. Because if the startup goes the wrong way, the legal system will not be kind to you. So you have to take your time. You have to protect yourself from all aspects. I've been on a board of startup in Berlin. They operate differently than the region. It's much easier. During COVID, we've seen the support of the German system to the startup. I've seen similar initiatives in Bahrain, just to be fair. We're still far from that system in terms of support of startups in difficult times. So the experience with the European startup was very comfortable, to be honest, during this difficult time. What we invest in is people first, then the concept, and how we can support that company. If it's a business that we don't understand, we don't get involved in, regardless how smart, how good, or because we are a family business, and it's very difficult to explain to a lot of the older generation the concept of multiples. That's a tricky word. There are a lot of new terms that are used in startups or in this new businesses that were not there. They mean the same, but they're basically so. It's very difficult to explain to someone. Well, you'll invest $1 and we're hoping to get a multiple, not returns. So that's one of the things that we face trying to market these things with the other family businesses. So that's my humble experience. I hope that answered you.
Thank you, Khaled. Yeah, it did. It's actually interesting, just to connect what Hussain spoke about and what you speak about just now. It's like how do founders kind of recalibrate themselves to try and speak the language of maybe traditional investors who might, have had done investments over a very long period of time, using their own investment philosophy, terminology, etc. But now the startup lingo, the terminology, everything has changed completely. So there is definitely a bit of recalibration.
Narayan, just to recap on that, let's also take into consideration that there is a lot of wealth with young business people now. People that have started a startup, they've created whatever the startup, food truck or whatever, and they've created some kind of wealth. Those people are more flexible in terms of they have the risk appetite is much higher than the established businesses. So you'll find or people that have inherited money or people that are paid good salaries. Those people are the risk appetite is much higher than the traditional family businesses in the startup scene.
Interesting. So I think if I understand you correctly, you're talking about the next generation.
Yes.
Yeah. Who are driving. So that's, I think, good news for founders like Hussain and every other founder and entrepreneur here in the region. That mindset is changing. Great. Well, thanks very much for that feedback, Khaled. And with that said, I'd love to move to Shelly, to talk to us a bit about, how crowdfunding. Now, you said you've been running this for the last 7 years. So how has crowdfunding really changed the angel investing and the VC investing space at all?
Hi. So first of all, on the very basic level, it brought a lot of capital into the ecosystem. And it goes kind of to what Hussain talked about. As a founder, the investors that comprise your company are basically a result of what options you had and what people and investors were out there. And I think that ever since crowdfunding sites came about, in a way, if there was a time where investors had the upper hand, today entrepreneurs have a bit more power and there's a bit more balance in terms of capital that's willing and looking to go into and fund companies. I think that from the investor perspective, there's also been, in a sense, a revolution. Even before we started iAngels, angel investing and venture capital investing in Israel was something that only people that were very successful, very wealthy could do. And typically they would only do it locally because there wasn't a way really to access opportunities from other places in the world. And it's very important to understand that with startups and in general in private equity, the aspect of access is incredibly important. It's not like you can go and buy Apple stock on a public market and then go to sleep for another 5 years. You have to, first of all, be aware of the company. Second of all, you need to be educated on the company. You need to have access to information about the company to even know that you want to invest. And third, which is no less important, the other side, the entrepreneur, actually needs to want to partner with you as well. So this is incredibly important and something that was only available through crowdfunding sites. Today, as a crowdfunding sites, we act as eyes and ears for investors abroad, investors that are incredibly sophisticated in Dubai, in Abu Dhabi, in Hong Kong, in Switzerland. These investors may have access in their own communities, but in Israel, they don't have access. And as an investor, even if you're the smartest person in the world, you can't know where to invest if you don't know what your options are. And if you don't know what other opportunities are out there and what other companies are out there from a competitive perspective. And so the first thing that crowdfunding brought is the opportunity to really democratize this asset class, because before that you had to make it your life to be a successful angel investors. And now that there are equity crowdfunding sites that do the due diligence, that make it their lifelong career, as I have. We have a team of 20 people here on the ground, and that's all we do. All we do is look for companies. We do due diligence on them. We work with them closely. We sit on their boards. I made it my job, and I have many successful investors that have their own careers and they're doctors or CEOs or investors in other areas. So that's one aspect. Another aspect which is related to this is the educational aspect. And investing is investing and is investing, but every type of investing and every asset class has its own has its own features. And here I can really relate to what Khaled has talked about, where when you're investing in venture capital, you're investing in people. First of all, you're investing in people. It's not like, you're not looking at a balance sheet. You don't have any promises with regards to the future. You're investing in people, and you're investing in a market opportunity. And a lot of the work around investing in these stages is really analyzing the people and the team and what they bring to the table. And about half of our due diligence goes into just that. Learning about the people, speaking to references. We do also psychological assessments, really trying to understand how this team, how do they complement each other, and most importantly, what kind of growth factors do they have in their personalities? Are they flexible? Are they people that will able to withstand the difficulties in being an entrepreneur? As an entrepreneur myself, I can share that the last 7 years they were wonderful, but it was a roller coaster. And when you're investing in someone, you want to know that first of all, they have that resilience, they have the ability to withstand. You want to know that they're flexible, they're able to come up with a hypothesis, test it, and very quickly they'll be able to change the direction if needed. Because one of the reason angel investing is so risky is because you're basically running against time. You have funding for maybe another 1.5 years or 2 years, because typically you raise funds for your next milestone. And up until that point, you're losing money. You can imagine that if you take the most talented team in the world and you give them an everlasting pool of capital, that eventually over time, they'll be able to figure it out. But when you're investing in a startup, you don't have that luxury, and so this is a very important aspect. And equity crowdfunding sites like ourselves have done a lot to educate people, to share our due diligence, to share our insights, to create webinars, to connect between people in the network. And we have investors that tell us till today that we taught them everything they know in angel investing, just by nature of the many transactions and deals that we've done over the years. And another two aspects that I wanted to talk about is the aspect of the funding, because historically, when you made angel investments, you might be able to get into a deal with $100,000, a seed deal. Today, to get into a high quality seed deal with a top entrepreneur, you need to have at least $1 million. And if you want to defend that position, you might need orders of magnitude above that. And so as time went by, angel investing has become less and less relevant and economical for professional investors, because what happens eventually, if you don't have millions of dollars to continue pouring into your most successful companies, then you start losing your rights. And one of the most important aspects of this asset class is to be able to defend your position, to be able to continue investing in your most successful companies, because by more heavily weighted in your best companies. And what happens in reality is that the companies that suffer the most and that aren't able to raise funds constantly need money and constantly come back to their angel investors for funding. And the companies that are most successful have many VCs running after them, and then they ask their angel investors not to invest because they're oversubscribed. So when you have a platform like iAngels, where we're a significant investor in our companies, because while our investors are able to invest $10,000, we as a whole invest usually $2 million. So we come in as a very substantial investor, and we're able to continue receiving information and continue defending our rights. And last but not least is the added value aspect of equity crowdfunding, where you're able to enjoy the social networking of having many people around the world that are involved and that you can connect with. And as a startup, especially, by the way, as an Israeli startup, this is very important, because Israel is a very small economy. So when a startup in Israel builds a company, they're actually targeting they're actually targeting a customer that's overseas, typically Europe or the US or China. And there are many cultural differences and many differences in general in doing business. And so having a crowdfunding partner is very helpful, I think, to such entrepreneurs looking to go global.
Well, thank you very much, Shelly, and I must say I couldn't agree more. Particularly, I'd love to give a couple of examples of where we've tried to negotiate as angel investors both pro rata rights and information rights. And back in the day, we used to get it, but increasingly it's becoming difficult, as a single angel investor to get those rights. So I'm sure crowdfunding as a platform, because it gathers investors together, it's able to get those rights to continue with the follow-on funding, especially for companies that are doing great. So thank you very much for that perspective, Shelly. And this region, the GCC region, is definitely at its infancy in terms of crowdfunding, and I'm sure with experienced crowdfunding players such as yours being able to kind of enter and partner with other players here, both investors and founders alike would stand to benefit. Thank you very much. Let's move on to Akshata on the securities token space. So Akshata, we keep hearing a lot about securities tokens, and it's promised to solve the liquidity issues for early stage investors. Talk to us a little more about the regulatory landscape of securities tokens here in the region.
Right. Essentially, if we just take a step back, the idea when security tokens started, and then many have sort of it's common understanding that security tokens were here to replace ICOs, and many people have looked at security tokens as an alternative to utility tokens. In all honesty, though, security tokens were more so a different way of looking at your regular stock and share options. It started off with full swing, with security token offerings. They became very famous, and everyone was trying to do offerings. But the truth is not every company can go public, and pretty much most regulators in the world were looking at security tokens at par with the existing shares and securities regulations. And that's where what we now recognize as digital security, something that all the regulators around the world have now sort of made peace with, is what now we're seeing. So as we speak in the region, ADGM has already come out with a legislation which is up and running when it comes to issuance of digital securities. They treat them at par with their existing shares and bonds or debt issuances. Similarly, DFSA, as we speak, has given out many sandbox licenses within which they are testing various models of digital securities to assess whether they are at par with your regular shares issuances. But here's the thing. What is essential to remember when it comes to security tokens or digital securities or whatever other terminologies one may want to use is that the leg of angel investment was exactly the leg which was targeted with the issuance of security tokens or digital securities, because most companies sort of realized that if they were to reach out to the retail clientele, which most regulators differentiate between the retail clientele and accredited investors, the retail clientele was what was being targeted with the security tokens. So now that's a leg, and that's an area which I would say from a regulatory perspective is still under a lot of discussion. There's a reason why many regulators across, and as we're also ambassadors for Arab Monetary Fund, we've had the fortune to interact with various regulators. I know Bahrain is testing various models. I know UAE, where we are, is testing models. Sama, Saudi Arabia, Oman, they're all testing various models. But that's where the crux of it lies. Because for a regulator, they don't want to permit, or let's say they don't want to fall in a situation where every company is going so public that there's a lack of governance, there's a lack of control, there is a lack of consumer protection in that entire structure. On the other hand, they also want to ensure that the liquidity issues are fixed with let's say the help with issuance of digital security tokens. So it's currently, as we speak, from a regulatory perspective, it's a very balancing act that we've seen. We're also working on the first exempt offer issuance from ADGM, But yes, we are. I think we are 4 to 5 years behind of where we should be right now, from best utilizing the technology.
Yeah, I couldn't agree with you more, Akshita, on that. Having worked with the regulators here, they do work very actively with the industry participants such as ours, and we've definitely had very good engagement with the DFSA, and we do see at least they make sure that they make the industry participants see where they are coming from in terms of the balancing act, and that's what is important. Then there's that sense of appreciation at both ends, and we exactly know what is going on. So we are quite bullish about the regulators coming with the desired regulations very soon for more and more securities tokens platforms to be launched through the region. But let me go back to Yasmeen in this regard. Yasmeen, EDB has been putting in exceedingly good efforts in ensuring that Bahrain has got a pretty strong flow of fintechs from outside of the region into Bahrain. So, what are some of the opportunities that you're seeing for fintechs in Bahrain and the wider region? And if you're able to comment with regard to say crowdfunding and or securities tokens, that would be great. But even otherwise, as fintechs in general.
Sure. So I think there's been, quite a number of different opportunities across the region within the fintech verticals. And I think the areas that, we're seeing quite a lot of interest is in open banking, actually. So open banking is one of the regulations that have been passed out by our central bank a couple of years ago. I think there was a recent launch of the new standards in place for open banking as well. So that would, make kind of the whole process much easier. So Tarabat Gateway is a classical example of that. And, this is a key opportunity as we embark on this innovation kind of, let's say, journey where, APIs is going to be important, having the banks, kind of join that play. And, at the end of the day, it's the consumer's experience. Kind of digital banking is another interesting area that we've seen the rise of that, I think, within the region. So these two areas I think would be quite of interest. InsurTech is another interesting vertical that, for the longest term, insurance has always been ignored. Kind of, let's say, so I think now we have regulations around InsurTech, so it's going to be a very interesting area to kind of further explore and try to see how we can revolutionize that aspect of the market. And I think with COVID-19, I think we've seen sort of the rise of the needs, right, for certain of these verticals. So InsurTech payments has been a very interesting space as well, especially with, I think, things moving online with the e-commerce platforms, and that touches really a lot of the startup ecosystem as well, where they can sort of look about how to, kind of look at their products to serve the wider region. We are a young population in this part of the world. There is a lot of, kind of third, generation, youngsters that are looking for the next opportunity. So it's always great to see that. We have, I think there was also a recent launch by the central bank of something called the FinHub 973, which is the idea is we have our regulatory sandbox, but this is even sort of a step further where it's kind of like digital experience of a platform where you can sort of, test your product, a proof of concepts, or with volunteer banks as well. And, given that they're part of the GFIN network, the global fintech network, of course, with the different regulators, companies, fintech player can, come and do cross-border as well activities between Bahrain and the rest of the other regulators' jurisdictions. Specifically on crowdfunding, I think there is definitely a lot of scope and opportunity. But like I do agree with Akshata, I think in terms of the securitization aspect of things, it's more of a balancing act, trying to understand what are the implications, what are the regulatory kind of needs and requirements. At the end of the day, regulators want to kind of ensure the consumer's protection. It's for those, let's say, not professional investors or those sort of people who have pockets of money and they want to kind of invest it somewhere. They want to ensure that framework is up and ready. So crowdfunding platforms, I think, could be a really good, situation in terms of where these investors could, direct themselves to. Securitization is another step further, but I think, we need to wait and hear. I think you're a classical example, I think, Bambucorn, in terms of how the central banks are looking to kind of take that conversation forward in terms of understanding what are their concerns and then understanding what are your appetite and trying to kind of match that. And it's always great to have that mindset of trial and error. With obviously keeping everybody's let's say what's the word? Forgot. Anyways, kind of benefits in mind. I think that's sort of where we are at the moment. But I think definitely there's a lot of scope for fintech players to come and test out and kind of explore the region. And specifically, I think within the different regions that are represented on this call, there is a scope of collaborative opportunities as well that can be explored further.
Thanks, Yasmeen. Shelly, we've clearly got one of the ecosystem builders here in Bahrain, Yasmeen, on this panel. I'd like you to, whilst you've touched upon the crowdfunding benefits in the previous response, I'd like you to probably maybe not necessarily compare and contrast, but to an extent talk about how crowdfunding platforms are able to add value vis-a-vis VCs, so that Yasmeen here, who's on the panel, can take that away, go back and discuss with EDB, saying, hey, these are the added benefits of crowdfunding platforms here. Let's work on that. So do you want to go for that, Shelly, just to talk a bit more about that?
How do crowdfunding platforms add to VCs?
Add value, yeah, correct. Relative to VCs.
Add value to venture. Relative to VCs. Okay. So first of all, it really depends on the crowdfunding platform. Crowdfunding it's like a buzzword for many types of platforms. Even within equity platforms, you have equity crowdfunding platforms that are more catering towards the investors that see themselves as investors, and there are equity crowdfunding platforms that take more of a platform approach, providing entrepreneurs with tools to crowdfund. I can take my personal perspective, where we're basically a hybrid of a VC and an equity crowdfunding platform, meaning that in all our engagement with startups, we engage with them like any VC. We're analyzing them, we're doing due diligence on them. They're not paying us any fees. We make a decision if we want to invest. We give them a term sheet, we lead rounds. We typically invest with other VCs, and there are a lot of VCs that view us as a VC as well. So that's kind of on one hand. So on one hand, we have the entire toolbox of a traditional VC. We sit on the board. We work very closely with our founders on their plans, on their business models, on their dreams and aspirations. We help them with recruiting. We help them with, finding people to engage with them on a channel basis or business development. But on the other hand, we also have our platform, and we have 20,000 members. And we ourselves are also members, for example, of the Fintech community here in Israel, which is the largest Fintech community. And so we have many ways to connect our entrepreneurs globally, and there are quite a few examples. For example, one of our portfolio companies, a Fintech company, eToro, which is today one of the largest and most successful Fintech companies in the world, and also in Israel. As part of our investment in them, we're one of their significant investors. We also onboard many of our investors to their platform, because many of our investors can also be relevant to their platform as well. Another example is one of our companies, Bina, which is a company that can measure your vital signs with a simple smartphone camera. It can tell you your blood pressure, your heart rate. And so as part of their B2C launch, we also launched it to thousands of our investors and community members who joined and downloaded the app. So this is just a couple of examples of how equity crowdfunding platforms can contribute to building the customer base of the companies. Another example is, because we're basically using technology and aggregating technology and building our own kind of innovative venture capital business, then we learn a lot about what's going on. We're very connected to the world and software and what's going on. Also in terms of investing, we were one of the first investors that integrated, safes and being able to offer different types of structures, different types of convertible loans, and we're able to be extremely creative about that. Another example is a few years ago when blockchain started to come about, many of our companies considered changing a business model or adding a business model or doing an ICO or creating a security token, and where other VCs had no idea what blockchain is and how to even wrap their head around it, let alone their LP base, which restricted that kind of investment because they're only allowed to invest in equity or debt, for example. We were able to both educate our entrepreneurs on the subject and bring forth such business models. And I think lastly, entrepreneurs that we invest in, they appreciate the fact that we're also entrepreneurs. So I think in many ways we see eye to eye with them and are able to connect with them on a whole other level, in the sense that we built our own product, we raised several equity rounds, venture capital rounds for ourselves, and we've simply seen a lot by nature of starting this business. So really, if you ask me the differences, I would suggest that maybe there aren't differences, but rather by partnering with an equity crowdfunding platform, you can partner with someone that's both a VC but also has kind of a new set of tools to help founders become a global company.
Great. Well, in that sense, aren't we living in a world of cooperation, right? Cooperation with competition, isn't it?
Yes.
So yeah, thank you for that, elaborate response, Shelly. I'm just going to turn over to Hussain just to check. Hussain, you haven't obviously availed of crowdfunding to date, but if you were to, having heard Shelly, for the last 5 minutes in terms of how crowdfunding platforms add value, you as a founder, what would your specific expectations be from a crowdfunding platform, whether it's pre-campaign, during campaign, or post-campaign?
So I think, I've been approached by a couple of similar modules. I think it's a couple of names like Seed Fuel, not Seed Fuel, excuse me, but Seed Invest. I think there's a couple of other crowdfunding kind of like investment companies that invest on behalf of a group of investors. I've been approached by them several times. They've always included that, hey, create your profile and upload this ton of information and basically do the entire job yourself. And then once we manage to get the get the funding in, we will take credit and we'll take fees. This didn't sit well for me. So I'm sure what you guys are doing is obviously a bit different. I'm listening to Shelly talk about it and listening to you talk about it for a while. It is significantly different to the extent where I think there's a ton more that's being done. And I heard Shelly say that there are no, they don't charge the startups any fees. But to be honest, I think I would give it a try, but not now necessarily. I don't need it right at the moment, but at some point, if I manage to do something else somewhere down the line, if I advise anyone that actually, I have a couple of startups that I sit on advisory boards for, I could potentially push them towards you guys, because that just makes sense. It's going to make their lives easier. And I think the fact that you're talking about the whole 8-month, 9-month gap where they have to raise funding is going to be significantly brought down if they have a platform to support them in terms of that fundraise. I think I'm not going to say there are challenges per se, but there are still things that we need to take a look at. I mean, there's this whole regulatory aspect of it in the region. Since we're still in the sandbox, we're just testing it. So there's whole regulation kind of like being built up, at least in Bahrain, obviously within the region. So we need to figure out how can that be regulated? How are we going to be able to, obviously the responsible party to regulate is definitely going to be central banks and monetary agencies. But then again, what is going to happen? What is going to change? And obviously, to what extent are startups are going to push forward towards this? And in the end, yes, it's really good to have one party to kind of like invest and represent multiple investors and support in things like hiring and stuff like that. But then again, I'm a fan of strategic investment. Like Khaled mentioned, they actually get their hands dirty and go to meetings. So for me, I think I'm sitting on the fence right now, and I just need that push,
Okay.
kind of like
We'll make sure that we'll push you towards it rather than away from it. But thank you very much for your candid response. So probably I'll just move to Khaled. Khaled, I've read a few reports which talk about
Narayan,
investors having to.
Narayan, sorry, before I think Yasmeen
Can you
was
hear
trying
me?
to. Yes, I think Yasmeen was
Yasmeen,
trying to comment on Hussein's.
Yeah, sorry, but I didn't want to cut across anyone's conversations, but I just wanted to highlight maybe just one minor aspect. Bahrain actually has regulations around crowdfunding, both equity and lending. So that's currently not in the sandbox. It's actually a full-fledged. So ideally, we'd like to have somebody that can work in that space and operate, and to kind of serve the region. I think what Bambucorn is currently doing is the aspect of securitization, which is yet to be explored within the crowdfunding space. Just want to clarify that. Sorry to Khaled to interrupt your flow.
Thank you. Thanks, Yasmeen, for clarifying that. So Khaled, back to you. I was going to say, I've read a few articles which, talk about up to 5% or so of net worth being allocated to early stage investments. So that's, I wouldn't say recommended, but that's generally what people tend to see. Now, the question that I have is, given the risk profile of early stage investments, startup investments in particular, what would be the key motivations of investors to allocate up to 5% of their portfolio towards startups? What is your thinking on that?
Well, Narayan, the family businesses that have met in the region have different appetite towards, let's say, risky investments, or allocating something for a startup. So defining a percentage, I think a lot of family businesses are not there yet on deciding that we will allocate that kind of percentage for investing in startups, or we're still taking baby steps in the region. I've seen maybe in Saudi there is a strong appetite now. I don't know if it is because of the experience, or is it a fancy thing to do, is investing in a startup and being part of this whole thing. I've met a couple of VCs, or what they would consider themselves VCs, and I'm still not convinced, to be honest. It's an exciting time for a lot of people. I'm still not sure that a lot of those companies know what they're doing. I think it's more of an excitement phase. Is it similar to the phase that the investment banks that happened back 10 years ago in the region, and where you had a lot of these investment banks popping up left, right, and center? Is it similar? I don't know. But to define a percentage, I don't think we're there yet. From the conversations I've had. So I cannot answer a typical. It is good to put an investment aside for these startups, but I cannot define an exact percentage. And Narayan, just before you take, I had a question. Maybe Yasmeen can answer, or Shelly would share the experience from Israel. We always talk about the bright side of investment in startups, and the regulators say it's easy to start a business. What happens when times get difficult? How are those regulators or gonna help those startups? What if this startup end up failing? So because any startup or any business or any ecosystem depends on supporting innovation, supporting people, encouraging people to take that risk and starting their own concept. The region is not there yet, and that's where, again, I go back to Hussein's comment, where in the States you raise funds in a month compared to 8 months. So the question to them, I'd really like to know how is it in Israel, their legal system, but I would like to hear somebody else's opinion. Sorry, I'm not taking your role, Narayan, but I'm really interested in knowing what happens when things don't go well. And I think Hussain also has raised his hand. He's eager to say something.
Sure. Before I let Hussain respond to that. Maybe I'll share my experience, Khaled. So I did spend a fair bit of time in the Bay Area back in 2017, and ended up meeting a lot of angel investors and VCs as well as founders. Being part of a couple of accelerators as mentors. Now, I think a lot goes with the mindset. There is in the Bay Area, there is ample availability of risk capital. People write checks for startups, knowing very well that out of 10 startups that they invest in, 8 or 6 or 7 will go bust. They know, they come with that mindset. But they probably bet on that 2 or 3, wherein one out of that 2 or 3 ends up giving them that 50x, 100x. So from that perspective, the culture and the mindset of investors in that part of the world I'd say, is very, very different.
Ryan, don't you think it's the legal system that supports that mindset?
I would defer that to probably Yasmeen or Shelly to talk about the legal system here in this region. So any of you guys, please.
I'm just going to say one thing before I'm sorry for cutting in. Bahrain has been spearheading in terms of supporting startups in the region by offering a sovereign wealth fund support scheme called Tamkeen. Tamkeen has been actually very significant in supporting startups and generally any company that wants to launch in Bahrain by offering support schemes in terms of marketing, in terms of covering for accounting and whatnot. So it kind of like tries its best to give more longevity, let's say, to let the startup be a bit more sustainable for a period of time until they get a grip on what they're trying to do and basically start generating the proper numbers to be able to secure funding and growing even further and scaling. So that's one thing that's in place today that kind of like helps startups such as ourselves and every other startup in Bahrain at least to kind of like self-sustain for a period of time. Not spending as much as a startup abroad would spend. That's something that exists today, and I can tell you I've benefited from it myself as a startup. And that's the only thing I wanted to talk about in this retrospect. But I think Yasmeen and Shelly, it's up to you to talk legal.
So happy to share my perspective. So first of all, in Israel, there are quite a few government support programs. There's an incubation program and there's a grant program where the government basically provides matching funds for companies that manage to secure investment from other investors. I think the most important aspect to think about when thinking about how governments should or need to support their entrepreneurial ecosystem is that in the end of the day, they're not investors. And being an investor is a professional. And especially when things go wrong or when a startup is having difficulties, if a government goes into really helping struggling companies, then there's really no end to it. It can be endless. In Israel, there are 5,000 startups at any given moment, and most of them, more than 95%, are struggling. And their success is dictated by the market, and it's very dangerous to for a government to think that the government itself can come in and change kind of the forces of the market. I think there are other things that the government can do to support in terms of education, in terms of supporting investment, making it extremely easy for international or local investors to invest, to give tax breaks, to create these matching programs or to create these grants. And also from the entrepreneurial perspective, to encourage people to take on an entrepreneurial path. In Israel, it's actually very common to be an entrepreneur, and from a very young age, we're raised with these values both in our education system and in general, and that I think is a positive thing. I think that, and this goes to something that you were talking about, Khaled. I think that investors and entrepreneurs both need to know and understand what they're getting into, and understand that, that things will go wrong. If you're investing in startups and you're successful 20% of the time, then you're a good investor, and that's okay. And actually, I wrote once a white paper about it on how to invest in a startup. So there we actually gave a recommendation to invest no more than 3% of your portfolio, 5% maximum of your portfolio, because these are this is a risky asset class. And even within that amount that you invest, even within, let's say, 5%, you need to diversify within that amount and make sure that that 5% is spread across several opportunities because of that. And because that eventually, startups are startups.
My question is more around what happens to companies when they fail. Do they get prosecuted? Do you have a bankruptcy law?
No, absolutely.
That's my question.
Yes,
what's the legal system?
They don't get prosecuted. To the contrary, I invested in several, in dozens of entrepreneurs that failed before, that had a company, that even had two companies that failed, that had one company that was successful and one that failed. It's to the contrary. Companies that fail produce entrepreneurs with more experience, with more lessons learned, with more maturity, with more humbleness. You're
not burned forever.
No, not at all. Not at all. I have entrepreneurs that became my friends since they failed. Entrepreneurs that I continue looking at their opportunities. To the contrary, it's more important to understand why the person failed and how that happened and how that came about, and if the person grew from that place and comes with more insights versus someone that failed because they were irresponsible and they were unethical, and the why and the how is actually more important than the what in this case. So
I think Shelly and Khaled, you raised a very interesting topic for discussion, and we're actually thinking of probably organizing a separate webinar in and of itself to address this. I'm sure
from what
jurisdictions. No, I understand, because I'm sure it would be interesting I'd personally be interested to see the stance taken by different jurisdictions with respect to this. So, but thanks for bringing it up. Since we've only got another 3 to 4 minutes left, I'd like Akshata to actually comment a little bit on, from a legal perspective, the key differences between STOs and ICOs for, the benefit of our audience.
Right, sure. Thank you, Narayanan. And in fact, I'd like to actually weave it in with where Khaled left it. So ICOs and STOs, actually, both of them are pretty misnomers, because ICOs stood for issuance of utility tokens, where pretty much most startups were sort of trying to replace issuance of tokens and fundraising through it with the round of angel investments. And the problem with that was that the investors were actually getting nothing in return from a legal perspective. Yes, they did hold utility tokens, but what's the utility of the platform is something which was way ahead in the future. Unfortunately, security token offerings were looked at more, they were perceived more as a replacement of ICOs. Completely incorrect, because payment tokens, utility tokens can still exist, and so can security tokens and digital securities. Similarly, from a legal perspective, not every security token issuance can be a public offering. So when we speak of laws and regulations, the regulators are still looking at security tokens at par with your existing share and stock issuances. So again, that was something which sort of it hit a roadblock there. So now I'm actually very glad that finally there are multiple options, which was actually always the intention. But finally there are options where crowdfunding goes hand in hand with security tokens in such a fashion that the startups can reach out more and more to the public. And then taking it back to where Khaled left, because specifically in this region, and I say this with all sort of due respect to everyone, but the problem with this, the laws and regulations in the region specifically has been that there has been a major lack in class action suits. So when we talk of US or when we speak of Bay Area, what really protects the shareholders and investors in most cases is the opportunity to be able to go behind a company not as an independent investor, but as a class of shareholders who can then raise their concerns to the regulators, or who can then approach the appropriate authorities for the company not having met their obligations. Similarly, as far as the corporate governance structure is concerned, when we are talking of incubation programs or when we are talking of accelerators, currently more and more regulations and more, the entire ecosystem is very excited about getting projects started. When it comes to sustenance, there is more requirement to see what governance models should be implemented in a fashion that more companies and entities are coming and reporting back to the regulators. Like in UAE, for instance, now we have the latest UBO regulations that have come out. So now that's where all the free zones will have the opportunity to look through and see that are the companies actually doing what they promised they were going to do. So that's again something which is very essential when it comes to investor rights and for sustenance, general ecosystem sustenance. If startups crash, then everyone fails. So yeah, that's pretty much my thought on that.
Thanks, Akshata, for that elaborate response. I just noticed that we have a lot of questions coming in from the viewers. I know, we are about a minute over, so we could, if we have the next 10 minutes to just address some of those questions, maybe we can't obviously take all of them, but I'll just kind of direct 2 or 3 questions at random, and any of you, feel free to just pick it up. And first of all, I think I do have questions from the investors where they're asking if we are able to reach you. So if the panelists are okay with us sharing, the email IDs, I'll probably ask our back office to share your email IDs on this forum with everyone so that they can reach you. But maybe a couple of interesting questions to address would be, one question we have is for startup founders, should dilution in equity be a potential problem? If so, what should founders be looking for to mitigate the risks for both the company and early stage investor? Hussain, I see you raise your hand for that.
Yeah, I'll jump in. So, because I read that question, and Mark Cuban says, a piece of a watermelon is bigger than a whole grape. So startup founders don't really have to worry a lot about keeping as much equity as possible. Obviously not because of anything, undervaluing their startup or their idea or their business or their sweat equity or whatnot. No, it's mainly because if you need the cash to survive, or you need the advisor to jump in, or you need the investor to support you in one way or the other, then you take that cash and use it, and then give equity instead. Yes, I do. Of course, you don't dilute heavily in the beginning. It's just common sense. It's logic. You want to wake up in the morning and feel excited that you're running your own business. You're not going to give up 80% of your business in the beginning. You're just going to give up like 10, 20% at least. But then you shouldn't worry about it as much going forward. Once you're a Series C level, hopefully you reach that at that stage, you'd be a multi-million-dollar business, and even owning a 10% equity of a 500 million business gives you like 50 million bucks in terms of value for yourself. So you shouldn't really worry as much about equity, like heavily worry about it. You just don't go overboard by giving it out. That's my response.
Thanks, Hussain. Thanks very much. Shelly, there is one question I see directed at you. What's the safest measure for equity on offer to crowdfunding investors? I suppose by safest measure, what I understand is, what percentage should be offered to crowdfunding investors? How much should founders get diluted by that?
So is this a question from the entrepreneur's perspective?
Yes.
Okay. So first of all, again, it really depends on what kind of equity crowdfunding platform you're thinking about, because I gave an example. Ourselves, we're like a VC. We're able to lead rounds. We act as a VC. We follow on. And from that perspective, it would be a question of how many VCs you'd like. Now, in general, from my philosophical perspective, I believe that it's good to build a healthy syndicate for a company from the get-go. I think there is something today because of how venture capital evolved. People are no longer aspiring just to create a startup. They're looking to create huge global businesses, and a lot of capital is required for that. A lot of rounds, a lot of effort. And my recommendation in general is to find two or three VCs or angel investors at any given round, so that your destiny as a startup doesn't rely on just one investor. It creates a negative dynamic sometimes when a startup is completely reliant on one of his or her investors. And so when we construct a round and when we lead a round, we're very thoughtful about what other VC can complement us. If it's a healthcare VC, we look maybe for a healthcare VC that specializes or that's based in the United States. If it's if it's a network effect company, we're looking for sometimes investors that you had experience as executives at Facebook or at Amazon. And it's really dependent on the case, but generally speaking, I would look for a lead investor that takes 50% of the round, and then maybe another 2 or 3 VCs or angel investors that would invest and contribute the rest, just as kind of a rule of thumb.
Great. We'll address 2 more questions. So one question which would be common to both Yasmeen and Akshata, and while they answer, Khaled, I'll let you think about another question directed at you. So the question to Yasmeen and Akshata is, who's responsible for regulating equity crowdfunding platforms? So you can speak for Bahrain, Yasmeen, and you can speak for UAE, Akshata. And before you respond to that, I'll just ask this question to Khaled. Khaled, the question to you is, to what extent should investor push their own thought process onto the startups into which they're investing? So are there any pitfalls of imposing your own investor ideas that may distort the startup founders' thinking? So while you think on that response, I'll let Yasmeen and Akshata respond on the regulators for equity crowdfunding platforms.
Sure. Akshata, if you don't mind, I'll go ahead. So in terms of regulating the crowdfunding platforms, both equity and debt or financing aspects fall under the jurisdiction of the Central Bank of Bahrain. I'd encourage you to visit the website or the links to those. However, there is an element of crowdfunding that would not get regulated per se if it's reward-based, and that would be under the Ministry of Industry and Commerce and Tourism. And so it all depends on the type of activity. So if you're on the lending side of things, on the actually taking equity, or you would charge interest and stuff, that will definitely be required to be regulated by the central bank, and they could give you more feedback on that one as well.
Thank you. Akshata?
Right. So from a UAE perspective, in UAE, DIFC's DFSA, which is the regulatory arm, has been responsible for regulating the equity crowdfunding platforms and lending or property-based platforms which are set up. Similarly, from the mainland, it's ESCA, the securities regulator, which has put forth the intention of creating licensing models for crowdfunding. And again, in ADGM, we have something called PFPs, private financing platforms, which are actually more limited to professional investors, but partially, let's say, semi on the concept of crowdfunding, SME funding. So it's FSRA, which is the financial regulatory arm, is the one which is regulating the equity and crowdfunding platforms.
Thank you. Thanks, Akshata. Khaled, I think with your response, we'll probably close the session. So, feel free to go ahead, respond.
I'll make it extremely. I'll try to make it very quick. Well, the founder shouldn't divert totally from his concept, but he should have open ears to ideas and the experience of people that are either on the board or on the advisory board. And when the examples I give, there are certain people that I've met that wouldn't budge, and they wouldn't listen to local experience. let's talk about a company, for example, that is based in Europe or in the States, and they want to operate in the region, and they want to adopt the exact model here, which doesn't work. And I'm talking about different kind of businesses. So founders should at least have an open mind towards ideas. I'm not asking them to totally budge, but to have an open mind to the advice and the experience of people around them. So I hope that answers it in a nutshell.
Thank you very much. I think we're 10 minutes over, so I think it's only fair that whilst we have a lot of questions flowing in, we close the session, to respect the time of everyone. But what we will do is we're going to be sharing the email addresses of all of the panelists. So any of the audiences, if they have any follow-on questions, feel free to send emails. We're there to respond. And on that note, I'd like to thank each one of you for having participated in this great session. I'd like to think that it was really engaging, enriching for me at least, and I suppose even for the audience it would have been very beneficial. And Khaled, I'm going to be taking cue from the question that you asked regarding the legal system and the responses to bankruptcy laws, especially when startups fold up. So we would want to hold a webinar specific to that, and I'm sure a lot of our audience also would love to have answers to those. So on that note, dear panelists, thank you very much, and we very much look forward to staying in touch. Thank you.
Thank you.
Thank you.
Thank you very much.
Bye.